Success is a game of chance where you control the odds by your enthusiastic persistence and drive. My friends, every day in the marketplace, we have an opportunity to learn. That's what we do here every day is cover 4 big ETFs, the S&P 500, the NASDAQ 100, 20-year bonds, and gold. Why don't we cover these? They give us a good broad spectrum. We've got one commodity, such as gold. We have bonds, as in TLT, 20-year Treasury Bond Fund. We have the NASDAQ 100 is represented by the Qs, the cubes, QQQ, whatever you want to call it, and SPY, which is the Spiders S&P 500 Trust Series Exchange Traded Fund, which we will jump into first. And again, things are swinging back. They were down a couple of days. Now they've popped up. About 2% on the S&P, close to 3% on the NASDAQ 100. But what do we see still occurring? We are we've gone through 2 days into a 4-day candle. It is Wednesday, but remember markets were closed here in the States for the Labor Day holiday. Look at what we see though. We see we had a nice up move. We saw things starting to slow down this last week when the price percent oscillator went flat last week. Derivative oscillator also lost energy for the first time in many weeks. Now what do we have? We have a red down candle. First one we have seen since June. That's a long time. I mean, we just had stair steps moving up quite strongly. And what do we see happening? We've pushed through, we've dropped through, started the week off dropping through the 2-day trend line and now pushing through the weekly trend line. Derivative oscillator losing momentum. We see on the 2-day chart. Now again, that 2-day chart, we saw it finish drawing on Tuesday, started again on Wednesday. What do we see going on there? We see a slowdown in the down movement. It went green, but it's not a green open box. Again, price sitting right there on the 2-day chart, sitting right there on the weekly trend line. It had dropped below it. The up day pushed us right there on it. We see, of course, that we have well since passed the crossing over point of the 2-day. And of course, we have a 2-day crossover. We'll go ahead and bring that up to date. We will also make sure to rotate the candle around, which is, the arrow around. This stuff is so easy to do. Those of you who don't have TC2000, you are missing out. If you're using some free version of something for a few bucks a month, you can get the premium. There's nothing better that I'm aware of, and I have people write me all the time. I can't find the price percent oscillator on my charts. I don't know where the derivative oscillator is because your charts don't have them. You need good charts. TC2000, you get $25 off if you use the link in our show notes. You can see that at the channel. You can see that on your YouTube. You can see that on iTunes. It's there on your podcast. Wherever you are, you can find the link to TC2000. We also, if you subscribe, you can download the same charts you see us using. Those are available too. A link there is available for you. But we now have a confirmed crossover going down on the 2-day. We go to the 4-hour. What do we see there? We see where it dropped like a stone and then up some. So, maybe bottoming out for a brief time. Who knows? Doesn't matter to us. We're waiting for one of 2 things to happen. We're waiting for the 2-day to recross going up, if indeed that occurs, or we're waiting for the weekly to cross over going down. Are we going to jump in before either of those events occurs? No, we're not. We're absolutely not going to. Why? Because we're going to have plenty of time once it's confirmed, as we saw back during the COVID crash and we saw during the COVID recovery. We had lots of time to get in and to play it safe, not to get jerked one way or the other. Think of all the poor souls yesterday that thought, oh, the market's going to go down forever, and they jumped in with no indicator confirmed verification. What happened to them? They got hammered today because the S&P went up 2%. We'll bide our time. We don't have to trade. We're going to trade when it makes sense. We're going to do our practice purchases when we have indicator verified crossovers, such as a weekly vertical crossover or a 2-day recross. That last 2-day recross alone on the S&P was wonderful to us. So we'll trust our charts. Why? Because our charts work. What do we see going on the Qs? We see on the NASDAQ 100, look at that down movement in the price percent oscillator, derivative oscillator losing momentum. We have a red candle forming this week. It bound through the prior week on the 2-day chart. We see it pushing through the weekly chart so far this week. Derivative oscillator losing lots of momentum. 2-day chart, back out a little bit. We can again see slowdown in the down movement. Price percent oscillator, we need to go ahead and bring this over, rotate this one around too. The way the week has been with Monday being an off day, I'll show you what happened. You can see where on Friday we had a full 2-day candle. This latest 2-day candle is really just a 1-day candle. Because the markets were closed on Monday, it didn't reset. It just drew Tuesday and then started over on Wednesday. So we'll go ahead and make up for that and rotate it over. But you can see the 2-day chart heading down, derivative oscillator gaining downward momentum, price percent oscillator slowing down a little bit in that down movement, but still got some downward pressure there. We see on the half-day chart where things rocketed down, little up in the morning, further up in the afternoon, still below that weekly trend line though. So we'll continue to watch and see, oh, you know what we need to do too that we hadn't done. Now that we have that crossover going down, we need to go ahead and draw. Again, it just happened. So at least we'll go ahead and make our 2-day candle, our 2-day trend line moving somehow in the right direction. And that's where we are on the Qs. Again, waiting for it to sort its way out. We've got the weekly going up, 2-day going down. What does that mean? It means we don't have a trade. We don't have a trade until the 2-day either recrosses going up or there's enough downward pressure that the weekly crosses over going down. We'll wait and see what happens. Which way is it going to go? I don't know, man. I'm not a prognosticator. I can't forecast this for you, and I don't really care. I have lots of options one way or the other. If it decides to go back up again, great. You can either buy a practice call or buy back into the Qs on your practice trade, or you can go short if things cross over going down. That is by jumping into something like PSQ. That is the ProShares Short Fund. It actually goes up when the market goes down. So again, pay attention, watch, learn. Oh, and you could also buy put. So anyway, that's what we're going to be practice trading and looking to do one way or the other. Now, let's look at bonds, 20-year bonds. We had 4 weeks of strong down movement. What do we see so far this week? A green spinning top sitting right there at the weekly trend line. Price percent oscillator still edging down, derivative oscillator gaining downward momentum. 2-day chart, really just sort of a sideways slide underway. Things are still confirmed down on that. We did pierce the weekly trend line. So again, which way is it going to go? I don't know. Down a little bit for the day, 0.27%. So we'll continue to watch, see what there is to see and learn there. You can see as we look at the half-day chart, we had that strong down movement on Friday the 4th, then popped up on Tuesday morning, and then for the last day and a half, it's been trying to head down, but it still hasn't reached the low that it reached back on this last Friday. Trying to cross over going down, hasn't done it yet. Derivative oscillator is negative, gaining some downward momentum. We'll see what happens over the course of the day on Thursday, but we will pay attention that we have, again, the weekly heading down, the 2-day heading down, and this half-day trying to cross over going down. Feel better about continued movement once it hits a lower low. And of course, this crossover going down on the half-day chart won't hurt. That's where we are on bonds. What about gold? Like stocks, gold was up for the day. Now again, typically in a healthy market, stocks will go one way, Bonds and gold will go another. Well, gold is going up. That's what we see for the day. Now we look at the week. We can see we have a red down candle trying to cross over, going down. We'll see if that happens. If there's continued up movement in gold, you might not have a weekly vertical crossover by the end of the week going down. But that derivative oscillator is gaining some downward momentum. It's crossed over, and we see things sort of pulling back with the up day. We'll wait and see. Again, price percent oscillator sitting right there on the red signal line. Looks like it's trying to cross over. We'll wait and see. Again, you don't call a candle till the close of the market on Friday, or very, very close to it, around 3:50. That's 3:50 p.m. on Friday when we have weekly vertical crossovers. That's when we trigger the buy in our practice trade. If you want to get those signals, guess what you do? You use our texting service, 33222. If you will put that number in your phone and text the word Charting Wealth to the number 33222, that's Charting Wealth, just one long word, and we will put you on our texting service list, and you will get the notifications when we have weekly vertical crossovers. I'm also going to include 2-day recrosses in that. So keep that in mind. That is a free service. You have to be in the States. It doesn't work overseas. I'm sorry, overseas friends. But guess what? We announce those things. We talk about them on Thursday. We confirm them on Friday. So again, if you watch the show every day, which you should be doing, then you'll know. Don't worry about it. Don't sweat it. Okay, let's talk about what's going on the 2-day chart. It is continuing to move down, slowing down a little bit in that. We see a green up candle forming so far, first day of this latest 2-day candle, but we do see the price percent oscillator still heading down, losing some of that downward momentum. Derivative oscillator still negative, losing some of its downward momentum. And is there a way for us to redraw our, not really well, trying to figure out how we could possibly redraw our 2-day trend line and connect 3 candles. Doesn't look possible. We'll do the best we can do there. That's where we are on the first day of this latest 2-day candle. We look at the half-day chart. It crossed over in the afternoon, up in the morning, further over in the afternoon, making for a day and a half of up movement. We'll continue to watch and pay attention. We can at least redraw this for our trend line as best we can. Wish we could connect things better. Remember, we like to be able to draw trend lines to connect 3 or more candles. That's when you can count on a trend line a little more. We like our trend lines. We like them to be useful. When they're not useful, then they're just there. You can't really count on them to do much other than sort of give you a quick bird's eye view of the direction. That's where we are, folks, as we end the day. We're going to wait and see how gold finishes up the week. We're going to have a weekly vertical crossover going down. Waiting to see if bonds are going to continue plummeting down and just how they shape up. And we want to see what's going to happen on the Qs, the NASDAQ 100. Will it be crossing over going down? Will the S&P? We don't know. Maybe this is just a short blurb and things will turn around and start heading back up again. Nonetheless, we've got to have that 2-day recross to get us back into up moves on the S&P and the QQQ in our practice trades. Folks, that's where we are as we end the day. If you don't have our book, you need it. You want to know what it is we do here? The best way to learn it is first through our book, Charting Your Way to Wealth. You'll see a link in your show notes. We also have free trainings we put out every day, but they only come to you in your email if you're a subscriber, and you can subscribe for free at chartingwealth.com. Please go there, sign up, just put in your name, email address. That list is never spammed. It is never sold. It is our proprietary list, and we will send you our trainings and our daily reviews and our once-a-week weekly review and forecast. It's 1 email a day, 5 days a week. That's it. Now, for subscribers, what do we have for you? We have a training on every indicator can fail, and we talk about how to find indicators, how to rely on those indicators, and how to make proper decisions. That's where we are, folks, as we end the day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.